What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for NIO with the ticker symbol NIO. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So the last time I looked at NIO was also 2 weeks ago, prior Monday, not last Monday, but the Monday before that, because I was out of town. So I think last Monday I was expecting prices to go up because it was just more likely to, and that's what occurred on the chart. So let's see what it's more likely to do now. So you can see that if I connect the swings on the bottom, I drag it up, it looks like there's this channel that is forming. So this is holding prices pretty nicely. So if it's this obvious, I'm pretty sure other traders are seeing the same type of channel or the same type of downtrend. So they're looking at this downtrend and they're analyzing it, saying it's kind of weak, it's kind of shallow, and prices usually move from the highs to lows and the lows to the highs. So since we just hit the lows, prices were trying to reach the highs. So right now we still have room up there, especially because prices are still within this channel right here. So even after the break of this impulse or channel, there's a good chance prices make another attempt up. So I think higher prices are not out of the question yet. Things can change because we don't know what's going to happen on the right side of the chart. We don't know what's going to happen after this red bar. But normally, prices should be still trying to push up higher towards this high $10 level, low $11 level. So I still think there's an opportunity for that because this impulse is not broken yet. For example, this impulse right here, you can see that it was broken, but price made another impulse up. So same thing right here. So price made an impulse up, it broke it and made another impulse up. So hopefully you guys can see that. Let me go and remove the yellow channel. So you can see after the impulse break, and we get another impulse break, another impulse break, another impulse. I mean, that's just how the market works most of the time. So I'm expecting the same thing to occur right here. So I think shorts could be trapped here. What the market likes to do is, have a nice little juicy red bar for traders to enter short on, and then they're going to use the stops of the shorts to push up the price to where they want it. So basically what they're doing is, let's see, take a look at short. So if we went short underneath this red bar, you put your stop above it, because if you're wrong, you want to get out, above there, because price can go much higher. And they're probably targeting maybe, maybe a 1-to-1, risking 100 to win 100 or whatever, 1-to-1 ratio. So either way, I wouldn't, look for a short. This does not look good. Or I wouldn't look for prices to drop. I still think, prices have room to the upside. So it looks like shorts could be getting trapped here. Again, it's not guaranteed because I could be reading this wrong. It might be something else going on the chart. But right now it's looking like prices are trying to do what it did in the past, where we see these impulse, break, another impulse, impulse, break, another impulse. So, I mean, we could drop lower. I'm not saying we won't, but I don't think we're going to come back down to these lows. I think we go up first, and then maybe we'll come back down to these lows. We'll have to wait and see. But as right now, it looks like we still have, price still has the ability to continue higher after a small little break. So hopefully the break is not that big, because if it is, then it just might invalidate the whole second impulse. So here's the weekly chart, and let's go and draw the major pattern. Major pattern is down since January of 2021. If I connect the swings, this looks like this trend line is holding prices pretty nicely. So if it's this obvious, I'm expecting other traders to have this trend line on their chart. So everything becomes a self-fulfilling prophecy, because we all see the same thing. So, they're looking at this downtrend, they see the break, and you can see the price is getting shallower. So shallow is a sign of weakness, and that's why we might start seeing, a more aggressive buying occur, because the downtrend is rounding out, and price is still kind of trading right around this $9-10 level. So it's struggling to get through to the lower price levels. Price did get rejected from the EMA. You can see that we're closing kind of below it. We're just closed slightly above it, but still below it, which signifies that prices are still making lower highs. But again, it's still too early to call. It looks like we might still see another drop lower for another impulse up. So that's what's expected. I don't know what's going to occur on the right side of the chart, but just looking at the price, it looks kind of weak. It looks like prices want to continue up, moving higher, at least in the short term, and we'll go with that, and I'll give you guys an update next week, Monday. This is Vee Trades, and thank you for your time. The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now.